Feroze Azeez joining in this morning, joint CEO of Anand Rathi Wealth. So now, Feroze, this, whether you think this is good or bad depends on who you are and which side you're sitting on. So for a lot of your investors, I suppose this is just what the doctor ordered. How are you looking at it?
See, I'm looking at it. In fact, I think it can, if all of us sit on the side of the client, which is what I think in financial services is a fiduciary responsibility you should, we'll all see this circular as a great circular, point one. Of course, there are some scopes of improvement, and that's why it's a consultation paper. Now, if you break this down into economies of scales, transparency, and investor rights, and break this down, of course, there's a lot to talk about. If your viewer wishes to know. Basically, when it looks at, like Charu was mentioning, the slab rates, one thing which I think every viewer should take a note, it is slab-wise as an income tax slab. So even a scheme with 1 lakh crore will have these 225 to 1.75 and so on and so forth. These are like income tax slabs. That's point one. Point two, transparency need was extreme. As a distributor, it becomes very difficult for us to comprehend what is the distributable TER. There are two concepts, which is called total expense ratio and distributable expense ratio, DTER. For us to understand what should be our brokerage, we have to arrive at distributable TER of the asset management company. In spite of having 20 people doing only mutual fund research, they find it difficult to arrive at the distributable TER because each expense of each scheme is different. Somebody is paying more brokerage if there's more charge. So transparency need 10 on 10. Economies of scale, I think SEBI has to acknowledge one point that economies of scale in the entire value chain don't exist. An asset management company has very little fixed costs, has very little variable cost beyond a certain point. But a distributor has a consistent variable cost and lesser fixed costs. So economies of scale should be seen with very different lens, in my opinion. If in 10 years the customer should get great service, he needs to have the distributor alive. Especially when there is a direct scheme for a person to cut the distributor and go, then you should not ideally in the long run tinker around too much with the regular scheme so that there is some longevity. I'll stop here, Tamanna, rather than
absolutely. Feroze, good morning. Feroze, good morning. Alex here. And so your point is well made. I want to understand a couple more things, because one thing that stood out to me is the removal of STT, GST, CTT, stamp duty, your statutory limits or levies rather from the TER, and it's going to be charged outside of that. What is the implication of that? Can you explain it?
Sure, Alex. The implication of that first is complete transparency of what is the management fee, what are the taxes and brokerage. Once they get separated, there is more management possible in this separate bucket. Asset managements will start competing even on costs, because if I'm paying brokerage of 12 bips for an equity scheme, that's what is cited in the consultation paper. SEBI is noticed very clearly such microscopic lens. I'm so honored to be under the auspices of SEBI. They have noticed that in equity schemes, brokerage is 10 bips, for example. The same asset management company is paying only 0.1 bips, 1 bip for arbitrage funds. When a retail guy today gets zero brokerage, practically zero brokerage on derivative, somebody who's managing 5 lakh crores, should he actually charge a brokerage? Maybe. Is there institutional broking giving research to people? Yes, they are. Can they be paid separately from the P&L of the AMC? So I think all these are questions which are coming because of the separation. So transparency, and when you separate something, you start managing it. You start competing on it. You start having efficiencies built in. So 10 years from now, if they're separate, I think efficiency will automatically be the next resultant outcome, benefiting everybody from a client standpoint. That's what I would say on this brokerage.
Feroze, therefore, let's come to the bottom line then, and I take what you've said, but if you take a holistic view of this, it's certainly positive for the investor. Maybe a little bit of a step down from what was proposed in May of 2023 when you talked about a weighted average total expense ratio for active equity schemes, and it would have dramatically reduced the cost, in my opinion, maybe more so than this. But would you say that it's negative for the broking industry, where you're seeing less money earned for schemes that you sell?
Yes, maybe, maybe not, because here SEBI has done some reduction, but also excluded the expense. Now, somebody has to total what were the expenses and what is the reduction to arrive at it. And this is a consultation paper. Of course, 1-2 bits this side, that side is going to be the impact could be higher as well, or could be lower. But what happens is SEBI is also very clearly understood that they've given a near zero cost alternative to a client. I think that's what SEBI did in 2013, giving a direct scheme. अगर आपको 1.25% पसंद नहीं है, तो उसी स्कीम का आपको 40 पैसे में मिल रहा है, ले लो, right? You can't have your cake and eat it too as an investor. You want the full research of a distributor, but you want the lowest scheme. Or that is also possible. There are advisors, there are RIAs who will do direct and take 20 bips. So anybody wants to customize his fee lower than regular, there's always
Feroze, sorry, just taking your cake analogy, it's not about having your cake and eating it too. It's being charged for that same cake again and again. That's what SEBI is saying. How many times will a customer be charged for that same research? It can't be a recurring cost.
Absolutely. No, Tamanna, I completely agree. On the research cost, if you came, I just told you that if a retail guy with 10 lakh rupees today has the alternative of zero brokerage, an asset management company, that kind of economies of scale, if you go to a broker, why should he be charged more than a client whom I do brokerage for with 1 crore rupees? 1 lakh crore rupees should get lesser brokerage than 1 crore rupees. Of course, research is being given. So you can pay from if you hear me again, I'm repeating it. If an AMC thinks the broker is also providing research, why pay him as a brokerage? Pay him as a research fee from your P&L as an asset management company. So you should not be charged twice. But I think the expense ratio, all I'm saying is if an investor wants today an expense ratio less by 70 paisa, he has another alternative. And SEBI has been kind enough. And SEBI has been so pro-investor, and I can't be more proud to be under their umbrella. I just yesterday went to insurance withdrawals. I took a client to 6 different insurance company offices to withdraw his own money after 10 years of investing. And they made him wait an hour every place. So my entire day went in traveling. That's IRDA thinking of investor. And here we have SEBI saying that gifting of physical units should be possible.
Correct.
There's so many other great things SEBI has done.
Feroze, I'll come in over here, Hiral, this side. With all of this, we're talking about brokerage transaction cost, which will probably impact AMCs and brokerage houses as well. But when you talk about the base expense ratio slab, now that has been increased by 5 basis points in the first 2 slabs for open-ended active schemes. Will this somewhere cushion the impact that AMCs will see of removing the additional 5 basis points charge? How does that work, number one? And two, with everything that's happening here, what is the bottom line impact that any of the listed entities or unlisted entities that are going to see in terms of their financials?
Yes, I'll just tell you where this 5 bips charge came. I think it was 7-8 years back. SEBI, earlier what used to happen was if there was an exit load on a scheme, the exit load was credited to the asset management company. So asset management, if I was a CEO of an asset management company, I would pray that clients redeem the money and the exit load comes into my P&L. So SEBI said, no, this doesn't seem logical at all. That has to be credited back to the pool of the other fund. If there is a short-term investor, he should remunerate a long-term investor. So exit load started getting flowed back into the portfolio of the investor. That time, in the lieu of making this change, SEBI came up saying that, okay, when there's an exit, I will allow you to charge 5 paisa to the total portfolio. That is now being removed. So I think it is only logical. That was a painkiller, and a painkiller lasted for 6-7 years. I don't know the exact period. Don't hold me to it. Now that painkiller is being removed. And then that painkiller is also being remunerated with something else. So I think the whole total total consultation paper will not have a large impact on expense ratio, to my mind, but it will bring in immense amount of transparency and efficiency. And this whole fungibility has been so well articulated. There have been R&T costs R&T cost of R&Ts is higher in equity scheme and lower in liquid funds. So there is some degree of fungibility. The activity in a liquid fund is so much more. There's a corporate redeeming, putting in money every single day, large quantums. But there the R&T cost is lower. The asset management company is remunerating the R&T by charging the equity scheme. So these fungibilities have been identified in the consultation paper so beautifully.
Us will be waiting, Feroze, to understand what is the impact on financials once it actually comes into place, because that's what the key question over here is going to be. At least one, I mean, from an investor perspective, yes, how much less they pay, by how much will their gains improve, and two, someone who's invested in companies who are into this business, will that weigh on their margins, will that weigh on their profitability or not? But thank you, Feroze, so much for joining in and sharing your comments on this view.